Hello and welcome back. And in this short video, we're going to take a look at a couple of examples of the dynamic price pivots indicator in action live on the charts. And we're starting with an example on the 5-minute chart for gold, the GC contract. You can see there right at the top left, we've had a pivot high delivered, and that was the trigger for the bearish price waterfall, which has seen the metal move from the 1122 per ounce region, and we're now trading down at the 1116.50 per ounce region. Since that move lower, we're currently moving into a congestion phase. And what's happened is the market's fallen. We had a minor rally, then it fell again, and then we had a little rally right at the bottom there, and a move higher with our first pivot triggered. Now at that stage, we don't know what's going to happen next. It could simply be a minor rally and then a continuation of the bearish trend. But what happens next is we get a down candle and then we get another up candle, and on that candle we then get our pivot low triggered. So we're now starting to think that perhaps we are moving into a congestion phase in this price region between $1,116 per ounce to the downside and $1,117.50 per ounce to the upside. So we get the pivot low delivered. So we're now wondering if we're moving into a congestion phase, and we are waiting for a further pivot to confirm. And 2 candles later, that's what arrives. The pivot high arrives pretty much in line with the first one. So we can now be fairly confident that we are developing a congestion phase of price action, a pause point. For whatever reason, the market is moving into a congestion phase. The 2 pivot highs there have given us a pretty clear indication of the ceiling of this region, and the pivot low there has also set the floor in place. You can see there we're sliding lower. We've yet to see a further pivot, either to the upside or the downside. And what we're waiting for now is either a break away from this region, which would then re-establish the trend if it's to the downside, and that would be confirmed. We'd look at the price action, perhaps we'd use volume to confirm any break away from the congestion phase. Congestions are where trends are born. Markets pause, they go into congestion phases, and then ultimately they break away, either re-establishing the trend or reversing into a new trend. And that's what we're waiting for. But understanding where we are in the price action, understanding the condition of the market, whether we are in trend or whether we are in a congestion phase or moving into a congestion phase, that's the key. And that's where the pivot really steps in to give us a very clear and very simple heads up as to where we are and what we're looking for, and whether the pivot will confirm that we're moving into a more established range of congestion or simply a pause and then reversal. But on this occasion, we're now waiting to see whether we're going to get a pivot to the downside perhaps, which will establish the floor of congestion further. We may even get another pivot to the upside. There's no hard and fast rule on this. Whether you have 3, 4 or 5 pivots to the upside and maybe only 1 or 2 to the downside, they're not always equally placed. This is just giving you a sense of where the congestion area is building, and the pivots are really just helping to define those regions of the upper level and the lower level. So it's a very simple little nice example of how a congestion phase builds in real time and the consequent pivots that are created as a result. So let's take a look at another example. And here we are on a 5-minute chart for the Euro Aussie. And this is a very nice example of what I was describing in the introductory video, which is about how we see a trend building in real time. Over to the left, you can see that the market was in a congestion phase. We had a pivot low. Initially, that was followed 4 candles later by a pivot high, and then 3 candles after that we had a pivot low. So at that point, we are in a congestion phase. We've got a floor in place. We think we may well have a ceiling being developed. The market rallies a little, and 3 candles later delivers a pivot high. Now that pivot high is a little bit higher than the previous pivot, so we are wondering now whether perhaps we're starting to see a move away from that short-term congestion and perhaps develop the trend. What happens? We get a down candle followed by the green candle with the pivot low. Now the pivot low on that occasion is higher than the previous pivot low. So we've got a pivot low that's higher than the previous one, and we've also got a pivot high that is higher than the previous one. So we're starting to think that perhaps we could now be developing a trend in real time. What happens next is 3 candles later rather, we see a pivot low developed. We've now got 3 pivot lows, each one higher than the other. The market then moves higher in a step with another 3 candles, and we see a pivot high. So we know for sure we are seeing a trend building in real time. We've got higher lows on the pivot lows and higher highs on the pivot highs. We have no further pivot lows develop, but towards the top we have another pivot high. So we know we're in a trend. Now we've had a reversal since then off that pivot high, but that's how you would see a trend developing in real time, with the little pivots arriving and really defining these steps as the trend moves and develops higher or indeed develops lower, with the pivot highs moving up higher above one another, and equally the pivot lows doing the same thing in a line. And that's what you're looking for. That is the creation of trend in real time. Once again, they are helping to describe and define the phase of price action that is building in real time on the chart. So I hope you've enjoyed those 2 examples showing the pivots in action. Why not grab a copy for yourself and put the Swiss Army knife of trading in your Ninjatrader toolkit. Thanks for watching, and see you again soon, and bye for now.